Welcome to the Stock Market Morning Prep video for Wednesday, July 16th. Well, we had a little scare from Janet Yellen's comments yesterday. She'll be speaking again this morning on her, she'll be concluding her testimony in front of Congress at 10 o'clock today. So obviously anything can happen. She had mentioned a few things about overinflated markets, at least a couple of sectors, which I've never heard the Fed ever pointing out a sector that is extremely overvalued or overbought, if you will. And one of them was the social media and then biotech. And I can't believe that she even did something like that. That's totally crazy. But anyway, markets got spooked. They sold off, and then they recovered late in the afternoon to pare off a lot of their losses. Dow Jones ended up actually eking out a gain, up $5. Nasdaq was down 24, S&P down 3, and then Russell, which is the leader right now to the downside, is down 11, and really is not recovering any of its losses from last week. So that is another big red flag that we're looking at. But nonetheless, they recovered. And last night we had China GDP come out, and they posted some better numbers, and we are up again this morning. So when is this euphoria going to end, and when is this craziness going to end in the market? Well, it's going to end. It's going to end very bad if the markets just don't really sell off in a appropriate manner, if you will. And I mean, maybe down one day, up 2 days, down another day. You have the markets that have just actually been literally going up since November 2012, and that was the election of Obama. Re-election of Obama, and we have massive rising wedges in all of the benchmark indexes that we follow. And remember, a rising wedge is only bearish if it breaks, and it has not broken. So we have been trading in a really small range, and even in the last few months, we've been trading in a small range with some downside pressure, of course. But we have to be very careful here. To me, this just makes me very, very nervous. And I suspect something unfolding shortly. And again, guys, I'm not saying there's going to be a massive crash or anything like that. But when you have a market that's been going up and just continues to go up, and I do say, please follow the trend. The trend is your friend, and that's what we look to do. Is look for stocks that have been basing, stocks that are coming out of bases that have sold off, maybe because of an earnings report or a downgrade. Those are the stocks that you want to at least try to look for. And yes, it is counter trend until we can get above our bases and the moving averages are basically on your side, headed straight up. That's something that you're not counter trend anymore. But obviously, if there is overhead resistance and we did get a little bit of base lower, that would be counter trend. But it's also a safer bet right now than chasing stocks that have been up 30, 40, 50%, even 100%, and that would be something like a Netflix in several months. That's just crazy. I wouldn't be looking to even trade anything like that. So that's what we're doing, but then again, it becomes a stock picker's market and there's less to do. However, now when you have everybody one-sided, and you have the middle of the summer when there's lack of market participants, and yet all you need is one bad geopolitical event or anything happening overseas, and you're going to have a quick sell-off, and risk happens very fast to the downside. So that's why I say, I wouldn't just be putting money to work up here. Day trade, maybe an overnight swing trade, maybe for 2 days, and even then you're susceptible to any downside movement. Hence last week, down 30 handles in the S&P, and yeah, the market's recovered, and now we're back to new highs again. But that one day is not going to happen, and that's going to mark a top, and you're going to be holding positions that you don't want, and it's going to be a scary day. And that's something that me personally, I'm just really not looking to go through at the moment. So to me, day trading is probably the safest bet. Yeah, there's lack of liquidity, there's lack of trades, but you know what? 2-3 trades, maybe if you get one even a day, and you're successful in your money management, you're still getting paid at the end of the week and at the end of the month. So just a quick thought. I have a couple of indexes that I want to follow you, that the reason why the markets are a bit iffy here. And we have the ATR, and I've showed this before, right? When ATR drops, markets are headed north, but when we start to rise, you'll see a big drop in prices, in equity prices. Now, we haven't got there yet, but we're starting to rise a little bit. So this is something that we're going to keep an eye on. Nothing crazy, but something that we need to keep an eye on. Now, here's the McClellan Oscillator. Now, McClellan Oscillator now finally is trading at the lower end of the range of all of 2014. Okay, and now if you remember, I think this was Monday that we closed lower. I said, look for a buy signal, and we did get that push higher. Yesterday, obviously, we sold off a little bit, and now we're back into the band. So I would be looking for, if we do sell off again, look for a big move lower outside of the band and a big push lower so we can get extremely oversold. And that's going to be your cue when you want to step in and look to buy. That would be a safer bet. Okay. Another one is watch the advanced decliners, right? We want to look at what's happening inside, underneath the hood, the breadth of the market. Well, this to me is not healthy at all. When you have price moving higher but breadth of the market, the internals are actually moving lower. That is actually very scary. So I think there's something in the cards brewing in the next, let's say, several weeks that we could get a little bit of a washout. And I would like to see a washout. I'd like to see this come all the way down, something like this, if you see, and then even something like this, and then all of a sudden we start to bounce. And that would be your cue as well, is to look for quality stocks when that does happen. We get a little bit of a washout. And here is the advanced decliners, the New York Stock Exchange. Okay. I think I showed that to you already. Let me get this one here. Here we go. All right. Now, and this is the with volume. This is the advanced decliners with volume, and this is what I'd like to see. If you see here, so we want to see that wash out all the way down and get price to dip, and then once we get a little bit of a move higher back again, and we get that reversal, then I would say it's safe to start looking to add to your position for a decent move going into the fall. Okay. Now, the reason why we haven't sold off and we recovered is because banks did good. Banks had some really good earnings yesterday. J.P. Morgan, Goldman, and then, of course, Citibank on Monday. So that's kind of holding the market up at the moment. And I did suspect that banks were going to be good. And I like the banks going into, and I've been mentioning that to you throughout the year and also in December when I said banks would be one of the better ones to be picking on weakness. And why? Well, because that, with the Dodd-Frank Act that we have, banks cannot trade any longer customer-client money. So they have to do what? They have to lend aggressively. And if they're lending aggressively, what's going to happen? What's going to help? It's going to help also the housing market, and that's why I also like the builders. Now, the builders, at this point in time, I wouldn't be looking for a trade. I'd watch what lumber does. I showed that to you yesterday. Let's see if we get a washout, a quick push lower in this market, and then what I'd like to do is pick up some of the builders and, of course, some of the banks. And that's going to be really one of my tactics here when we get a little bit of a washout. Because the market's a little bit iffy at the moment. And that's why just stepping back and getting ready for what is to come, at least what's forecasting in technicals. All right, real quick through the indexes. We have Japanese spot yen still holding up here. Again, if we get a big washout, then all bets are off, and I think we go higher yet again, and maybe we hit that 2,000 mark in the S&P. But right now, we're still holding true to this ascending triangle. We're holding support of the Fibonacci cluster that's been holding here as resistance, now support for all of 2014. Now here, this is another thing that scares me is bonds, right? Bonds have not sold off. We had a big push lower, but bonds did not sell off here. And this is something that is kind of scary because what's happening here is that the bonds are literally holding up well, and now it's creating another bull flag. Could this be another leg higher? If bonds start to creep higher, you got to be careful. Money's going into the safe havens again. Bonds, consumer staples, healthcare, and utilities. Okay, and that's something that's if that does happen, you'll see movement in those sectors, and money will come out of equities. All right, so just a word of caution. ES again holding true to the 20-day moving average. We're holding back up the 8. We did have that little push lower. We're up 6 handles this morning on the GDP number from China. So all bets are still on to the upside. And I think the target's going to be 1988 to 2000. All right, at least the test of this upper end of this channel. Then we have the IWMs, which is scary right now. Another divergence again. We had weakness for 2 months. Equity markets really ignored it, as they ignored pretty much everything. And then, sure enough, now we're breaking down again with the internal. So that's why I'm saying using a word of caution here. Excuse me. Equity markets in the transportation sector moving higher. Really, there's no reason why it shouldn't be. And plus, we had crude oil actually dip for the last several days. helping to boost the transportation sector. Okay, and lastly is the Qs moving up higher as well. We had some good movement in the big high beta names: Apple, LinkedIn, and also Amazon, Netflix. They also moved higher, helping the Qs push up as well. So the indexes haven't changed. Excuse me. We also are moving along to the upside, but eventually it's going to change, and it's going to change in really quick and in a big way. So just a word of caution. I would not be looking to short the market, but I would be using a lot of caution here and picking your trades selectively until the market can realign itself here. Because if you really think about this, this is going back since May. All right, now we're in July. You can just count how many days we were down. I mean, this is kind of crazy, right? We have literally have done nothing but gone up, and I think maybe we had a handful of down days, maybe 3, 4 down days, and that's scary. I mean, this really doesn't. This is not supposed to happen, but it does, and that's what we're dealt with. So again, just trade your plan. When in doubt, stay out. All right. Hope it helps. Janet Yellen speaking again, concluding her testimony at 10 o'clock. So just heads up, and also we'll check your calendar, your earnings calendar too, guys, in case if you're holding stuff. And also we have crude inventories coming out 10:30 this morning as well, Eastern time. Hope it helps. Talk to you tomorrow. Take care.